Hi everyone, welcome back to my channel. My name is Phi and this is Money Philosophy. Today is September the 7th. We will continue with our technical analysis on Tesla. At the time of this recording, it is 3:40 Eastern Standard Time, so we still have about 20 minutes left in the trading day. The current price action for Tesla is 753, up over 2.5% from last week. Let's take a look at chart and see what can we predict for the upcoming days. If you're new to my channel, please consider subscribing. I am a growth stock investor and a trader, and I particularly love trading Tesla. I'd love to share with you my investing and trading journeys. We have a lot to cover today for Tesla breakout, so let's get right into it. Looking at the daily chart here, we can see that Tesla had made the high of the day of about $759 and then retrace a little bit, about $6 retracement, which is not too bad. The daily candle is still pretty bullish. It is a breakout candle from consolidation. So from August the 17th, with this hammer reversing candle, we can see that Tesla been moving up, consolidate, moving up, consolidate, and then now it is another tranche of moving up. It might be moving up again tomorrow. It might be consolidating, but it is definitely a bullish breakout. The volume though is at 100% by the end of the day, give or take. So this one is not a fake breakout. The RSI is heading into the overbought territory, but it's not entirely there. So I do think that there's a little bit of room for Tesla to keep running. The golden cross has been formed officially, where the 50 days SMA has crossed above the 200 days SMA, but it is not as pronounced, so it's not as visible here on this chart, but I can see that it has crossed over after a brief crossing, causing a death cross here way back in July. It started curving back up, and today it has formed a golden cross. So I definitely think that Tesla is heading into a bullish territory. Here's the hourly chart. After breaking out up to 760, start retracing a little bit. So the second hour of the day seems to be a reversing candle, and Tesla did dip a little bit and then start reclaiming back. Overall, if you look at just the hourly chart here, it does look like a ascending triangle, which is very bullish. Tesla has been consolidating for the last few days here, so today's breakout seems to be in order. Obviously, it is based on a catalyst, a couple of catalysts over the weekend actually. The first is that Cathie Wood in an interview confirmed that based on new information received, the base case for Tesla post-split is now $3,000 per share, and she believed that Tesla can reach $3,000 by 2025. Elon Musk, in a separate email to the employees over the weekend, also confirmed that he would agree with Cathie Wood if we execute really well. Now, from Elon's standpoint, I don't think he cares as much about the stock price, and he has said that time and again, but I do think that $3,000 per share does mean that Tesla could reach potentially $3 trillion in market cap, and Elon is more looking at the market cap at that point. So if Tesla were to 4x by 2025, I think it needs to execute really well. It needs to also get into multiple products. The Cybertruck needs to take off really well. The Semi needs to be rolled out. And the humanoid robot needs to start commercial production in order for Tesla to reach $3 trillion in market cap by 2025. It is a very ambitious number. It's sent a lot of Tesla fans crazy. I myself is one of them, but I do think that this is the beginning of a recognition or realization that Tesla has a lot more potential than Wall Street currently gives us credit for. So without further, the trading range for tomorrow is on the upper end at 772. The middle pivot point is 753. And the bottom pivot point is 741. I do think that all of these numbers are within reach tomorrow, but Tesla likely could break out even further. And if it goes above this top pivot point here, it could get to 793. That is about $40 from here. So it's probably highly unlikely, but Tesla is historically known for running pretty fiercely when it does run, so that could be a potential target for tomorrow, and if not tomorrow, possibly this week. Above 793, we're looking at 824 and then 853. After 853, you're looking at all-time high of $900. So right now, let's see, with this ascending triangle consolidation in the last few days, I do think that Tesla could get to 768, 771 area tomorrow, retrace a little bit, and then spike back up to 793 within a day or two after tomorrow, assuming the volume could sustain. Right now it's 99% and we have about 10 more minutes to go. So I do think that the breakout is very real. It's not a fake breakout. And I do think that it's sustained by volume. And based on this price action, I do think that institutions start buying Tesla more heavily compared to in the past. So the way back up to $900 seems to be within reach. And let's see what it can do after $900. So looking at the weekly chart here, 3 weeks in a row, Tesla seems to be moving up after a reversal from mid-August. It got as low as about $650, and then it has made its way back up about $100 since then. I think that if this week Tesla ends above 768, that is also a really good sign for the bulls. But I'm also afraid that if it does end above 768, it could get to the overbought territory. So we shall see. But right now on the weekly RSI, it has a lot of room to grow. One cautious note here is that the RSI seems to be moving sideways when the price is moving up. So that could be a potential divergence. But if I just look at this week RSI alone, I do think that it has a lot more room to grow into above $800 by the end of the week or early next week. So what am I doing for trading for this week and next week? I do want to contemplate a call option for the strike price of either 770 or 790, and I want to do that 3 to 4 weeks out so that I can capture the upcoming run. Right now it is retracing back a few dollars into closing, which is a good thing for anybody that contemplate a call option. If you did not enter a call option today, there's still a chance to do that in the morning if Tesla, for some reason, which is probably unlikely, but if for some reason Tesla gaps down in the morning, even just a few dollars, I think that's a perfect opportunity to enter a call, because based on the volume and the price action today, I think the bullish run is here to stay. So I'm looking at call options out to October 8th, which is about a month from now. I'm more of a swing trader, so I want to buy some time. Although I do think that the bullish run is imminent, I still don't want to lose premium over the next couple of days consolidation if it does consolidate. So if I'm looking at 790 strike price out to October 8th, you're looking at about 1750 for premium. If you're looking at 760, that would be about 2950. So it all depends. If you want to play it safe and you're willing to take a little bit more risk, you could do a 760 call option. I think chances are Tesla will hit 760s pretty high, but then that is not a whole lot from here. It's only $8 from here, so the percentage of return won't be huge, but the return will be more probable than if you were to go out to 790 strike. Lower investment, higher risk, the potential return would be higher if you pick 790 strike. If you are having appetite for something closer to expiration date, with shorter expiration date, you could look at September 17th. I wouldn't do anything this week. Once again, you could see 2 days of consolidation and premium could be eaten up. So September 17th is next week. And if you're looking at 790, that is only about $350 or $360 right now. 760 is about $1,200 in premium. That buys you about 2 weeks, give or take, and that you could weigh it out. This is actually a pretty good risk reward point. I do think that Tesla could easily get to 790. And if it gets to say 820 and you're at 790 strike price by the end of next week, that option could turn into $4,000 easily. from 360. So that's actually a very good risk versus reward ratio. But the downside is you could lose the entire $360. A few of you have asked me to give trade signals before I enter a trade and before I exit the trade so that you could be in the same trade with me. I understand where you're coming from and I appreciate your support for the channel, but I don't want to give trade signals for a variety of reasons. The most important reason is that trading is a very individual exercise. It is all dependent upon your capital, your risk tolerance, your DTE, date to expiration, your strike price. So what you want to take away from my videos usually is why I entered the trade, why I exit the trade, and what kind of price targets I'm looking at. I did not whatsoever coach you guys on emotions and how to manage the trade while you're in the trade, which is a very important thing. I can certainly make a video on those, but it is a very much individual exercise. I don't want to be looked at every other second to see if I should exit the trade, if I should enter the trade. That is not the point of my channel. On the other hand, I do think that, for example, days like today, if you watch my video, you would have a pretty good direction to go off of. So if I say that we are at the beginning of a bull run, or at least a bullish continuation, and my price target is 771, potentially 793, and if we're lucky, 724 by the end of the week. What you want to take away from that statement is that you could potentially enter a call by the end of the trading day today, or at the beginning of tomorrow if Tesla opens the day with a gap down or flat where it's at, which means that you gain a day in premium deflation. So your premium is arguably cheaper. You could probably get a good deal, an optimal deal given the situation. Now, do you wish that you entered the call last Friday? Sure. I certainly wish I did, but given the situation, we don't predict. We can't change what we did or did not do, but we can change the future. So we need to pick an optimal point given the sustained bull run to enter the trade, right? So I would enter 790 strike price, or even 760 or 770 if you want to be closer to the money. And then I would put 2 to 3 weeks expiration out. But your account size also dictate how much you could risk, right? If you have a $10,000 account, you could probably risk and take the longer expiration date. But if you have a $500 to $1,000 account, you might want to look at next week. But the risk is very obvious, right? If you take next week, you have higher risk. And if Tesla consolidate for a few more days, you're going to lose premium big time. So long story short, my channel is not a signal channel. I am an investor in Tesla. I trade on a side to make additional income in addition to my stock holdings. I don't trade for a living, so my mindset is very different from those who trade for a living. I would love to give signals, but the best that I could do is to share with you what I see for the next few days, and it's up to you how to execute it. If you take a trade and you'd like my input along the way, feel free to make comments. I read every single comment and I'll try my best to answer you while the trading day is going on. But that is it for this video. I hope you find the information helpful, and I hope to see you again shortly this week for an update on the next stage of the bull run.